Internal Revenue Service IRS tax news. IRS provides guidance for employers claiming the employee retention credit for the first 2 quarters of 2021. IR 2021-74, April 2nd, 2021, Washington. The Internal Revenue Service today issued guidance for employers claiming the employee retention credit under the Coronavirus Aid, Relief, and Economic Securities Act, otherwise known as the CARES Act, modified by the Taxpayer Certainty and Disaster Tax Relief Act of 2020, the Relief Act. So notice 2021-2023, there's a PDF to that here, explains the changes to the employee retention credit for the first 2 calendar quarters of 2021 including. So obviously some of these laws were taking place in the prior year, 2020, and then they're carrying forward into 2021, and we got to keep updated with what the updates are on them. So we're talking about now the 2021 employee retention credit for the first 2 quarters of 2021. So once again, this is notice 2021-23, explains the changes to the employee retention credit for the first 2 calendar quarters of 2021, including the increase in the maximum credit amount, the expansion of the category of employers that may be eligible to claim the credit, modifications to the gross receipts test, revisions to the definition of qualified wages, and new restrictions on the ability of eligible employers to request an advance payment of the credit. So as a result of the changes made by the Relief Act, eligible employers can now claim a refundable tax credit against the employer share Social Security tax equal to 70% of the qualified wages they pay to employees after December 31st, 2020 through June 30th, 2021. Qualified wages are limited to $10,000 per employee per calendar quarter in 2021. Thus, the maximum employee retention credit available is $7,000 per employee per calendar quarter for a total of $14,000 for the first 2 calendar quarters in 2021. So let's read through that one more time here. It's a bit confusing. Again, obviously, if you're dealing with this credit, you want to take a look at the notice and make sure you're in compliance. And if you have any help with these things with regards to payroll, you might want to get the help with the payroll. You don't want to mess up the payroll typically, because if you do, it does take a little bit longer to unravel the payroll issues. And if you don't pay the payroll taxes, especially on the employee portion of the payroll, it's kind of worse than just not paying the taxes, because the IRS could take the position that you withheld money from the employees and didn't pay it. So typically with payroll, you want to get it right. And I know these changes are complex, so it gets a little bit more difficult to get it right the first time. But usually this is one of those areas it pays to, as they say, measure twice and cut right once, get it right the first time if at all possible. So let's do that again. As a result of the changes made by the Relief Act, eligible employers can now claim a refundable tax credit against the employer share of Social Security tax equal to 70% of the qualified wages they pay to the employees after December 31st, 2020. So after the end of the last year, 2020. And notice they're talking about employers share Social Security. So you got to be careful about, the concept of an employee versus employer. There's basically a kind of a matching kind of concept within the payroll taxes for Social Security. So that's going to be December 31st, 2020 through June 30th, 2021. So that's basically the first 2 quarters that they're talking about here. And then the qualified wages are limited to $10,000 per employee. So $10,000 per employee per calendar quarter. So per employee per quarter, per 3 months. Thus, the maximum employee retention credit available is $7,000, because it was 70% of the up to $10,000 per employee. So up to $7,000 per employee per calendar quarter. That would be for a total of $14,000 for the first 2 calendar quarters. Obviously, the $7,000 per quarter, that's where they're getting the $14,000. So employers can access the employee retention credit for the first and second calendar quarters in 2021 prior to filing their employment tax return by reducing employment tax deposits. So this is where it gets a little bit confusing. Of course, they're trying to get the money out sooner. So what they're basically saying is you get access to the credit. Usually what happens is you file your employee taxes and the IRS forces you to take money from your employees in the form of Social Security and Medicare, as well as the taxes withheld for federal income tax. And then you match your portion of the employer taxes, including Social Security and Medicare on the employer side. Then you give that to the IRS. And then you basically have an informational return that's done quarterly, typically being a 941 return, which doesn't usually owe taxes at that point in time related to the quarter, but basically is an informational return saying, look, I had these taxes owed, I have paid these taxes at this point in time, here's my informational, report. Now they're basically saying this credit's going to be, this is my interpretation of it, it's on the 941s now, right? This credit is on the 941s. But you don't want to have to wait till the 941 to pick up the credit. What you want to do is pick up the credit, hopefully to get it sooner beforehand, which would mean that you don't have to give, you're holding on possibly to the deposits that you would normally be given throughout the quarter. And then it should shore itself up when you file the informational return at the end of the quarter, now taking into consideration the fact that you have this credit that would apply that should basically shore everything up. So that's my interpretation of the general idea, the general concept here. So small employers, i.e. employers with an average of 500 or fewer full-time employees in 2019, may request advance payment of the credit subject to certain limits on Form 7200, advance of employee credits due to COVID-19. There's a link to that here, after reducing deposits. So in other words, if you were to do that, if you were to say, okay, I'm going to reduce it by the deposits that I would have and take the credit basically before I file the Form 941 at the end of the quarter, but the deposits are not enough to cover the amount of the credit, then you might be able to get the money sooner than filing at the end of the quarter by filing Form 7200, advance of employer credits due to COVID-19. So first, you calculate the credit, you try to deal with it with the deposits first to get it before you have to file the quarterly taxes. And if it's still bigger than that amount, then you could think about filing Form 7200 if you're qualified or you're part of the category that can do so. That being small employers, i.e. employers with an average of 500 or fewer full-time employees in 2019. In 2021, advances are not available for employers larger than this. Further details on how to calculate and claim employee retention credit for the first 2 calendar quarters in 2021 can be found in Notice 2021-23. Under the American Rescue Plan of 2021, enacted March 11, 2021, the Employee Retention Credit is available to eligible employers for wages paid during the third and fourth quarters of 2021. The Department of the Treasury and the U.S. And the IRS will provide further guidance on the Employee Retention Credit available under the ARPA. Additional coronavirus relief information for businesses is available on irs.gov. There's a link to that here. There'll be a link to this in the description.